Hey guys, it's Calvin here. Thanks for checking out the video. Today is Thursday, December 6th, 2012. Okay guys, let's get right into the charts guys. You're looking at Apple Inc. daily chart. Wow guys, what happened the past few days? What a crazy drop and recovery today on Apple. I didn't do a video yesterday, but wow, what a beautiful flush based off the bad comments on CNBC. Margin requirements are being compressed. There's product cannibalization from for the iPod Touch from the iPad Mini. Blah blah blah. There's margin requirements are being raised to own Apple. All this mumbo jumbo, all this negative crap, excuse my language, on TV just caused a massive sell-off, guys. The biggest sell-off in Apple since 2008. Huge red bar, very bearish, a lot of panic selling here, guys. And let's go over the week really fast, okay, guys. I thought I was a genius, just an absolute genius. Ooh, I caught the low here. I sold, I believe, the 525 put spread, guys. So as long as it stays above 525, it's good, right? And wow, I thought I was a genius, but the next day, wow, what a huge drop, guys. So out of the money. I still felt it. Even though it was so out of the money, I still felt the premium being pumped against me. So that was not a pretty trade. I actually covered some and rolled to the 520. So I took off half, rolled another few contracts to the 520 spread. So I had two spreads down here, guys. But ultimately, it was a very nasty, nasty fall. I thought I was just a genius, selling. I sold it. I'll show you where I sold the remaining puts. Okay, guys. Actually, I sold the 490, I believe. Yeah, I sold the 490. So let me put that in so you guys can see it as a visual aid, I guess, as you will. But I thought I was a genius. I was selling puts right at the support. I was scalping this here. Actually, I made a huge mistake, guys. Off the 618 retrace, off this gap window, I actually long calls here overnight. I did play it as an intraday play. I played it. It had a nice $3 bounce, a nice few $100 gain, but I got greedy. It was the last 2 minutes of the day. I did not take the profits. And wow, what a huge mistake. I was thinking to myself, I think I made a mistake not getting out because this gap right here, guys, the gap fill was just a magnet the next day. And it went right to there the next day. But that was a huge mistake, guys. The gap fill was so close that it was just inevitable that we're going to tag it the next day. So I was shaking in my little space boots, guys. It's right here, guys. I should have taken the profit here. Nice little bounce here intraday. Went roughly from 540 to 543, so about a $3 gain there. Did not take it. So I was flat pretty much on the tray at the close. But what a huge gap down, guys. More panic selling, guys. But nonetheless, I came into the day with a game plan, guys. Okay, I had three put spreads. I did not stop out on this gap down, guys. I just had to stick with the charts, okay, guys. I had a game plan going into this morning, knowing that it was going to gap down, so go against me. I did not let panic, did not let emotion get to me. So I just stuck with the charts because that's all you can really do. The money's going to be there. If you're down, you're down. But the only thing you can do is just trust the chart. So that's what I did. I just ignored how much I was down, okay, and I just stuck with the charts. I knew that this level was major. Okay, gap fill, guys, from the major hammer candle that we made on November 16th. That was gonna be huge, guys, huge. People are gonna play this. They're gonna play it as a day trade, at least, minimally. Okay, guys. So I figured, okay, we opened right around here, guys. The 520, we flushed immediately, guys. Never buy the first 10-minute candle, guys. The levels are just not. You get panic selling. You're getting just pure fear and forced selling, guys. It's gonna flush, okay, especially with this kind of volume in the morning candle. And that's why I waited for the next level, guys. And what level was that, guys? I actually bought the pivot breakout, okay, guys. The pivot before the breakout, okay. Those are I always mention the same levels, guys. That was the level I bought. I was holding the 540 calls from here, guys. I was down on it significantly, okay, but I just held it, just trusted the charts, okay, because I knew this was the next level. Bad timing on my part, okay. Bought this gap window with the 618 retrace, but I had to hold it. So this was the gap fill, guys. 527 to 525. Everyone's waiting for this level, right? Everybody's putting their orders here, the amateurs. But if you know how morning candles react, they're very irrational, guys. They like to pierce it, punch through it on volume. It's usually the heaviest volume candle of the day, and it went right to the next level, which is what I predicted. It went to that's the 521. 520. I added the 540 calls at 521, guys. So pretty much nailed the low, guys. I believe I got it like $2-3 a contract. Don't quote me on that, but uh, it was just amazing. It's amazingly cheap, guys. It's $40 out of the money, so yeah, they're going to be at heavily wholesale price. Okay, guys. So, but that's what you want to do. I bought it extremely cheap, right at the 521. I'm sorry. It pierced $3 to this level here, guys. So I played the pierce of the gap fill, guys. And where did that 518 come from? Okay, guys, this 518, which was a low, you have a daily S2 pivot point, guys, at 518. Sorry, guys, it's hard to see it, guys. Very faint. I don't like to leave pivot points. I leave them really faint on my charts because I don't want to leave. I try to leave as you can see, I have a lot of things going on, so I try to reduce any kind of noise as much as I can. But here, it's right here, guys, pretty much right here in this vicinity right here. It's daily S2 518 pivot point. Okay, guys. So that's where you found support. Where else did you find support, guys? On a daily chart, as you guys may know, I like to play 50% retraces of hammer candles, and that's exactly what traders got today. 50% retrace of this candle, guys. 50-50 rule, 50% rule. Always a great rule, guys. Okay, it's always important. Okay, 50%. Okay, guys, very important in trading. Okay, so what was my game plan, guys? I was out of the money. I was underwater very, very deeply, okay, guys, this morning, but I had to stick with the charts. Added, like I said, the 540 calls right here. Added plenty of them. Okay, I had a lot right here. I added a bunch, and your stop out's close right here. Okay, because you know that your levels are. And I saw a little wiggle bounce. Okay, once I saw that, you see the candle, you see it moving up. I was like, okay, this is my reference point. Okay, this is where we want to see hold. This is your reference. Okay, guys. And I didn't know it was gonna be a hammer candle, but once I saw it close as a hammer candle, I was like, oh my god, this is gravy. This is beautiful. This is exactly what you want to see. A beautiful bottoming signal, okay, guys? And this was exactly what I was anticipating for it, and then we got it. I was like, thank you. We got the hammer candle, bottoming tail, beautiful bottoming tail on crazy heavy volume, guys. This is exactly what you want to see. On that close of the print of this candle, what did I do? I added more. I added more 530 calls, okay, guys? Added right here. I didn't need a retrace. I didn't need a 50% retrace. Like I said, conservative traders like to add on a 50% retrace of a hammer candle. I didn't even need to wait for it. I just got in right here, added the 530 calls. The reason why you do that because your stop out's closer, right? You want to, because your stop out would be right here. If you get in here, your stop out would be halfway opposed to way up here. Okay, guys. So it is risky taking up here. The more conservative play is to play the 50% retrace. Okay, guys. Same thing applies, guys. Daily chart, intraday charts. You can play the 50% retrace of a hammer candle the same way. Okay, guys. But went long here, guys. My target was 540 ultimately. Started peeling all the way up. Eventually took all my profit here, guys. It was all out of Apple, guys, at the 540. It was a big mistake. I actually got it all right here. And then we got a big pullback. So that was actually right, correct move. But it did show strength, consolidated, and you guys know the rest. It just continued higher, consolidated for the rest of the day. Okay, guys. But just the concept of being long at around 570, guys. I did that trade at 570, and I still was able to survive this. Okay, I opened the positions here. Look at this crazy fall, the biggest fall in Apple in one day on Thursday since 2008, and I still was able to survive this on the long side, even though I had all these puts that I sold that were way out of the money, and premium was pumped to the max, guys. I was drowning underwater, guys, and I was still able to recover because I knew this major level, guys. I actually had to cover some of my option trades, some of my winners actually. I had to cover my Amazon, my Sears holding. I had to actually sell those for like a break even to a slight gain just so I can go long on Apple. But it was totally worth it. I knew that this was a major level. I was not going to miss this run up, okay, guys? Even though I did not take advantage of the full run up, I only got half of it, but still a great profit, guys. Incredible, guys. I still made a profit. Actually, to tell you the truth, it was actually my best week. Long in calls here. It was the best profitable week I had all year, okay? It's actually 3.7% gain this week of my entire account. So, most people don't even make that in a year. I mean, I made that all in one day. Okay, just because if you see great setups like this, you just have to take it, and you just have to put risk on, because you know the best chart setups, you know what your stop out is, you just have to take it, and you just have to trust the charts, guys. That's exactly what I did, guys. So took profits early here. Now, like I said, it consolidated, went higher. Could have made another double more profit, or here 100% more profit if I held it, but nonetheless, still grateful. My greatest week yet this year, so no regrets at all. Okay, guys, so that's Apple right there. It looks like we're making a really nice consolidation pattern. So we might break out higher, guys. Look at this. Looks we're trading above the moving averages and we're breaking higher. This is like exactly what happened on November 16th when we made that low. Look at the same type pattern. Okay, flag consolidating above the moving averages and a gap up. Now we could have a gap up tomorrow. It could be in the cards, but this chart is now broken. Okay, look at the daily chart, guys. It is a broken stock, guys. Long-term investing, swinging this thing is just no longer in the cards now. It's just a broken stock. Like, you're below all these moving averages. You failed at the 200. You crashed down. Any bounce now can be shorted. Tell the truth. But right now it looks like we're going to be in a tight range, guys, on Apple for a while until we can recover the damage, guys. These moving averages are in the wrong orientation, guys. If you want to look upside down, that's the way it should look. Okay, you want to flip everything around because that's the correct way. Not complete downtrend yet, but on a daily chart, but it's going to need some time to consolidate, chop around, wait for these moving averages to start curling up, and eventually start trading back above them. Right now, this chart is in a weak position. That confirms it on the weekly chart, guys. This uptrend is ending, guys, based off where we are trading and with the current pattern. Okay, guys. But on a daily chart, we do look like we have maybe one more upside, one more day, and maybe to these moving averages right here, guys. But a retrace. But it's going to be a lot of work, guys, to recover all this mess. Okay, guys, let's look at the SPY really quick. Let me go really quickly on an intraday scalp that I did very quickly. Okay, guys, I like to go over everything that I did today. I actually went short based off this inside bar bear flag on this trend line. Got a little cute, stopped out for a break even, $27 loss with commission, so that's nothing. But what I do want to show you is this trend line breakdown that I should have played, but I did not play it correctly. See this trend line, guys? I knew this trend line was going to break. You could have played that for a nice short. It broke down, bear flagged it, retested it, and a nice flush. So that was a great trade that I just stepped away and missed it. So I got in a little early. I got in, I believe, right around here. I did not get the break I wanted, so I stopped out for a break even, and it did get that break eventually. Okay, let's look at the SPY really quick, guys. I have a few more minutes left on this video. It looks like we do have a little bit more upside, guys, on the daily chart. It looks like we want to break that 50-day moving average, okay, because we are consolidating below it very nicely. Okay, look at the 10-minute chart. I did want to long the 142.50 calls based off this kind of small inverse head and shoulder pattern or triangular pattern, however you want to look at it. But either way, the upside target does estimate around 142.70, which would be a lower high based off this double top, but that definitely could be in the cards tomorrow if Friday's economic numbers are good. Okay, guys, so we could be setting up for that double top right here, guys. So that would be a lower top, so that definitely could be in the cards, guys. But I did put an order in for that fill, the calls, but it did not get filled at the close. So nonetheless, you don't want to, you don't get filled, no big deal. There's always another trade, guys. So based off this triangle, or this, it could be an inverse head and shoulder as well, left shoulder, head, right shoulder, and we are closing above it. So that could trigger tomorrow, guys, on the daily chart of the IWM. It's also a nice bullish consolidation pattern, guys. So that's what I saw as well. And that also kind of prompted me to do that trade, but did not get filled. But nonetheless, nice pattern, nice base here. It's forming a time count above the 50-day moving average. Beautiful, beautiful chart right there, guys. So look for a nice move. I believe it could be as tomorrow. Based on the time count, it could be tomorrow. Okay, guys. So look for that, guys. I think anything else I want to go through? Google holding up well compared to Apple, obviously. Just still holding up a nice tight range. Not like Apple. You can show it's really weak. You can see that Apple's really weak when you see a pattern like this and it fails. That's a very weak pattern, guys. Look, it's holding up very nice tight range, guys. So Google acting decent right now, guys. Amazon, you guys know I did the 275 call spread. Had to stop out for a small profit. Would have been a nice gain, but I wanted to go long Apple, so I had to cover this trade. And looking pretty decent here, holding up well. See, this is when you want to see. When you're long a stock, if you're holding, if you're trailing some after this big move, this is what you want to see. If it's holding in a nice tight consolidation in a nice 25% range, that's very bullish, very strong, okay? Now, if this fails, watch out below. This thing can head north very, very quickly into these moving averages, okay, guys? I think that's all I wanted to go through. Great week for me. Greatest profit this week for me, 3.7%. Pretty not too shabby at all. But pretty awesome. Okay, guys, I hope you have a great week, guys. Hope you have a great day. Friday, I probably won't be trading. I actually did open a trade Friday. I sold the 480 call spread, 480 put spread. Okay, guys, I'll talk to you guys later. Have a great one. Talk to you guys soon.